of Sales. We're going to hear about his vision for the company as it continues to grow and how the fintech industry stays ahead. Speaking to Nick, please also welcome Ashley Armstrong, business editor of The Sun. Please welcome them to the stage.
Hello. So, afternoon, everybody. I think most of you are aware of Nick and Clearpay, or Afterpay in the States' story, but we were just saying, we chatted back in the days of Zoom and in the pandemic lockdowns, and when it wasn't possible to see each other in 3D, but now it is, and since then it's been a big change for you. But I wondered, for those in the room who don't know about your story and don't know about the business story, if you could just walk us through it, because it's always great to hear founders' pieces, whether it's kind of starting selling jewellery stock online and then spotting the gap in millennials. But yeah, if you don't mind just talking us through the beginning and then you can bring up to the present day.
Yeah, of course. Thank you so much, everyone, for having me. So my background is in retail. My family was in the jewelry industry all my life. Really long story short, I sold the most jewelry out of my bedroom while I was at university. And my neighbor at my parents' place was running a very large private equity fund, and we got to know each other well. We ended up co-founding Afterpay together. And basically, growing up during the 2008 financial crisis, there was a very clear shift away from credit cards to debit cards. Most of the financial services world just believed it was kind of a fad and that the debit card usage would kind of fade off. And we wanted to build something that was the opposite of how finance had historically done business, which was to charge the retailer a fee instead of charging the consumer, and really kind of flip the model on its head. And so we did that. We raised our first round of money in August 2015 with 10 retailers and a couple thousand consumers. And then 9 months later, we went public on the Australian Stock Exchange. So there wasn't a lot of private capital in Australia, so we listed out of necessity. And then 5 years after going public, we ended up selling the business to Square or Block for $30 billion about 3.5 years ago, and have spent the last period of time just like integrating the Clearpay, Afterpay business into the broader Block business, and now we're starting to execute the strategy.
And I mean, it is quite the journey, and quite a rapid journey for that to have happened. And we were just chatting kind of next door and talking about, you know, why the deal kind of happened, and it was largely because you thought that there could be that sweet spot of you two kind of offering, whether it was the cash app services, but also what I'm kind of intrigued by is like how it's working now. Like now you've done the integration, how does it work with those Square sellers? Like what's the take-up been? Like from those who are willing to see kind of taps on white squares to those people who now can offer their consumers slightly different finance options?
Yeah, so firstly, feel really fortunate to be part of the Block ecosystem. I think Block is one of the most diversified set of financial services assets. It has both millions of sellers on the Square side, and I'm sure a lot of people are familiar with kind of Jack's origin story of the little white dongle that went into the headphone jack, and then we have a business called Cash App. Cash App has 57 million monthly active US consumers. So think about it as kind of like peer-to-peer payments, but you can also buy and sell stocks or Bitcoin, you can take out a loan, you can do your taxes. And so, really believed that whoever was going to have the most seller and consumer scale was at the end of the day going to make this pay in full, buy now, pay later industry the thing, and really be the leader in the market. And so for us, it's about how do we bring Clearpay and Afterpay to the broader Block ecosystem. And for the last couple of years, we've been kind of integrating Afterpay into Cash App in the US and really starting to scale Clearpay in the UK, I think.
Would that be kind of how you'd say differentiate? Because the industry is a competitive one, right? And we kind of see new rivals cropping up, and it seems like a bit of a race for space, as it were, whether it's kind of like cash members or, I mean, is that what makes you kind of a bit different and kind of gives you that cushion?
I think it's definitely what makes us different. I think the other thing is that we're a debit card first company from the start. You know, Cash App is the 4th or 5th largest debit card in the whole of the US now based on spend. And so you kind of have Afterpay, 95% of our transactions occur on a debit card, not a credit card. 2 out of 3 millennials in the US, the UK, Australia, all don't actually own a credit card anymore. They use debit cards. And so really we've lent very, very hard into the debit-led economy. And I actually think that's our competitive advantage. I think intuitively we build really strong consumer networks and we know how to speak to that next generation consumer in the way that they want to engage.
Yeah.
And it's kind of led to this like interesting paradigm where consumers actually come to like the Clearpay app now to start their shopping journey.
Yeah, as kind of an inspiration tool.
Correct.
I wondered, because given that you started it with spotting the gap in terms of how millennials were shopping, like what they wanted. Sadly, we've all got older. And so how do you kind of respond to kind of what millennials want as their spending patterns have changed, as they are doing bigger transactions, as they want mortgages and maybe aren't shopping kind of in the same way they used to? How do you kind of react to that changing consumer base?
Yeah, so it's a really good point, and I think we've been speaking about millennials for a long time.
Yeah.
But like the average age of the Afterpay and Clearpay consumer is in its mid to late 30s now. It's kind of grown with the millennial cohort. But anything that was kind of prominent in the millennial consumer, like the debit card usage, is even more prominent in Gen Z.
Even though they show quite a lot of distaste for how millennials behave. And
Yeah,
kind of
they've got very similar financial services habits.
Okay.
You know, if you think about it, if 100% of people pay back a credit card on time, the industry doesn't work. And so with the way incentives were structured, I think millennials and Gen Z said, I actually prefer to spend my own money.
Okay.
And you're seeing that kind of engagement financial service profile really sustain kind of well down the path. But to your point, we've tried to do, we do what we do and we do it really well, but we're not trying to be what we're not.
You're not trying to offer mortgages.
We're not. You know, we're trying to help people manage their cash flow, spend the high frequency transactions that they would do on an everyday basis.
And,
but we're not
on that, because there's been critics often like look at those kind of small, low transactions, like whether buy now pay later is used for groceries, as a sign that actually that's unstable. You know, it shows that there's financial strain. Like, what about that? Because that shows kind of like that there's regular spending. Is that just how people are thinking about managing their budgets, or does it show financial strain?
Yeah, so not so long ago, I was doing an interview, and the question was asked of me, is the fact that someone bought a $50 dress with Afterpay or Clearpay a sign of the economic times that we're in? And my response was, well, I bought a $3 coffee this morning and I used my credit card, but I didn't need credit.
Right.
I just use it because that's how I budget my money. And this consumer, this next generation consumer, is actually using us wherever they can because it's their way of managing their money. They're looking at when they get paid, they're managing how much is coming out of their account. 50% of people pay back early. They don't have to, it's all automatic, but they pay back early. And so they're using this as their way to manage their budgets and manage their cash flow.
Yeah.
Not so much just kind of like pay in full or buy now, pay later.
It's really kind of like changed it on their head. And I noticed that there was a story the other day about kind of how almost the majority of Coachella tickets, and that's not the celebrities that you might have seen in all the magazines, but the majority of Coachella festival goers were using that kind of buy now, pay later as a way to do it. And those big kind of holiday purchases now. So it's kind of an interesting way that actually there'd normally be finance for those kind of things.
For sure. I mean, look, this category kind of started in fashion and beauty.
Yeah.
Because it was like high velocity, the right sweet spot, and then we slowly started to expand out. I think Australia is the best use case because it's a few years beyond, given we started there for the first time. Well, it was the first market that we started in. But in Australia now, you can go to the dentist and use Afterpay. You can get your tires changed with Afterpay.
Dentist sounds like a good idea, actually.
Yeah,
Very expensive.
an airline ticket. You
Yeah.
know, and sometimes it's just there's an unexpected thing that happens in someone's life, and they're grateful that they can use Afterpay because they're getting paid next week.
Yeah.
Or other times they're using it, for their kind of daily budgeting exercises. But really, I don't think there's a limit to where this category ends up extending. because it's the best form of, like, other than cash, it's just fundamentally, I think, the best way that consumers can, the most responsible way that consumers can shop.
Yeah, I mean, given that responsibility, I mean, we have been talking for many years about regulation in various different countries that you operate. I mean, in the UK, we're kind of on the second, third consultation into buy now, pay later. Where do you see that going? I mean, you've been actually advocating for it, but we still haven't got an answer.
Yeah, look, we've been advocating it kind of since the moment that we started, because, you know, getting certainty is a really important thing for our consumers, for our retail partners, and we've seen over the last kind of 18 months it start to now come to fold, which is a really good thing. And so the first market to regulate us was in New Zealand. Australia's coming soon, and then the UK has a path now similarly. And what I really appreciate from the engagement that we've had over the last many years is that our model has been very thoughtfully understood, and the nuance of our business and how it operates, and being thoughtful of what is the right proportionate regulatory response that caters for this industry that just wasn't perceived to exist 10 years ago or 20 years ago when some of the credit frameworks came into effect. So it's great to see these proportionate regulatory frameworks start to...
And you reckon the government is listening to industry now?
I think the government's definitely listening to industry. You know, I had a great conversation this morning. I think there's like a real desire to learn and to maintain dynamic, be dynamic, to not stifle competition, to really promote what's best for the consumer.
Yeah.
And I think more than ever those channels exist, and the market's moving incredibly fast. You know, this kind of era that we're in, whenever I'm even doing something like this, I feel like, you know, remember the first time you picked up a smartphone?
Yes.
And what you felt? Like, that's how I feel about what's happening right now with AI and other things. And there's just the world, everything's moving so quickly. It's very inspiring.
Well, one of the biggest things that's moving so quickly is kind of AI, right? And I think we've gone through that first wave of everybody putting AI and crowbarring it into their business to try and be a tech company. But as a tech company, where are you seeing the opportunities for that in terms of, I guess you're already adopting it, but how is it speeding things up or changing things?
Yeah, so I think that a lot of people talk about AI. I'm not sure people use it to the extent that they talk about it.
I think that's very...
And if that is you, I really urge you to go and like lean in really hard. And what I would acknowledge is that it is very unnatural to go and start to use the tools, because you've been trained to function and work in just a very, very different way. And the way that there's two things that I've done over the last kind of like 4 months that have really changed how I've been able to get leverage out of it. The first is how I use it. And when you start to prompt the AI, don't stop. Like, keep asking. And when it doesn't work, keep asking. Like, just keep kind of going like you would a colleague or a manager or a direct report, and like kind of use it as a partner to build. And when you don't understand, like we were at an offsite, like a leadership offsite last week, and I said to Jack Dorsey, I was like, this one tool I'm using, it just keeps timing out. And he said, well, why don't you use CLI? And I was like, oh yeah, CLI. I had no idea what CLI was, right? So then
classic acronym.
Yes, then I take this and I put it into the AI. I'm like, what? I'm like, what's CLI? And then it like told me, and then I went through.
What is CLI?
Command line interface, or something like that, right?
Did anybody
anyway,
it
doesn't matter what it is. But then I got the instructions.
Good to know it's not just us.
But I got the instructions on how to use it, and I didn't understand it. So I put it back into AI to break it down in a more granular level to explain to me how to use it. So like, just kind of keep going. That's like point number one. Point number two is, you know, if I'm having a regulatory conversation and then I'm meeting a partner and then I'm having an internal finance budgeting conversation, and then I have like a 30-minute block and it's like, oh, let me go and use AI.
Yeah.
That doesn't work. You know, it's like we've never had more agency to go and build ourselves and have no dependencies to just go and start to get work done. And it's like proper blocks of time I go and I build. And I build for like the first time that I have in like 10 years.
You kind of dedicate kind of almost...
Proper chunks of time.
Okay, so we can't just have a little tutorial and play with it and the freedom. Okay. I mean, on the opportunity side, that's obviously like one cracking thing, but what's the difference for you now from going from entrepreneur, founder, being the face of your business to now being within a very large US business? How has it changed like how you run it?
Yeah, look, it's certainly been, I've had to adapt. I've never had a manager in my life.
Yeah.
And so, you know, from my point of view, I feel really lucky to be part of Block. As I said before, I think it's just got such a diverse set of assets.
And you said Jack Dorsey is quite trusting with your
He's very I think like Block is a very entrepreneurial company, and it starts at the top. And I think there's a very bottoms-up culture of like build and you'll get rewarded, and again, have agency to go and do the work, have agency to go and build and ship products. So
yeah.
kind of the only place I probably could have landed.
And I mean, in this very volatile world, which we are all kind of, you know, bracing for constantly, I mean, how does it change how you kind of think about objectives? Does it change in terms of your risk appetite in any way? Like, or do you kind of just head down, keep going?
I think that we've never been under a greater pressure of time to execute than today.
Okay.
I just feel
from investors or from
just from I think the way that we work is changing. I think the pace of how we can work is changing.
Right.
I think the autonomy and our capability. I think roles are going to merge. You know, like people are doing a lot of different things and traversing, you know, different parts of the business, and you've just got more kind of self-agency to really start to lean into it.
Yeah.
And it's definitely not where we are right now, but you know, if you fast forward 3 or 6 months, I just think the world's going to keep getting more and more exciting.
Okay, buckle up kind of vibe. And then in terms of kind of that next step for you, like where do you think like the next objective is for it?
Yeah, so you know, from our point of view, it's how do we connect our ecosystem together? So how do we bring Cash App and Square together? How do we bring Square and Afterpay and Clearpay together, and kind of just keep executing against that strategy? There's obviously Block is very kind of Bitcoin forward, and you know, Bitcoin as the native currency of the internet is a focus for us as well. And so the key right now is how do we bring it all together? How do we bring it all together in one neat wrapper and keep executing as a single block?
Yeah, and I guess kind of last one, given that everybody probably in this room, the government, and are kind of looking at how to keep kind of tech companies in the UK. Clearly you're a global business, and so we seem like an island to you. But what would you say in terms of like fostering this kind of tech community?
Well, I think the UK is doing a lot right. I mean, think back 10 years, the UK was kind of like the poster child of innovation in the financial services industry across the world, and the most incredible businesses have come out of the UK. It's kind of like, it's lucky that it's thriving, it's big, there's a big customer base, and it's a great launch pad to go global from. So talent is really strong.
Yeah.
And it feels like all the right ingredients are kind of there to build great things, to export great technology, and keep building out of the UK.
Yeah, and keeping us here. I mean, like, you know, we were saying that there's plenty of other places nearby that kind of tech founders can go to. So how do we feel about kind of, what would you say the incentives are? Well,
I think incentives for people are always about building against great problems and solving the hardest problems. And if the hardest problems are being solved here on the ground, and it's pushing the world forward, I think you're going to attract the best talent in the world. I think the best talent in the world are very generally mission-led, and they really want the outcomes to come. So as long as we're pushing the boundaries.
If they build, they will come. Yeah, great. I think we're out of time. So thank you so much, Nick. Always enjoyed chatting. Thanks everyone for listening.
Thank you.